Hey everybody, I hope everybody's having a great spring. Everything's blooming here in Henderson County and looking quite awesome. The azaleas are out, some of the dogwoods, it's a great time of year to just go take a drive. So hope you're getting a chance to do that. Stay tuned to the end because I'm going to share with you one of the most interesting stats in this market update just coming out of the month we closed, which was March. So let's just run through the numbers really quickly. Before I get there, though, I do want to point out it's probably best if you're just not watching the news lately, because there's a lot of things that are causing the markets to go like this. And when the markets go like this, high volatility, as they say, it impacts rates, rates. And the biggest indicator in terms of where the 30-year fixed mortgage for real estate goes is really the 10-year Treasury note. And the good news, if you were paying attention a week ago, is that we had about 7 consecutive days of lower rates on the 10-year Treasury note, which meant that mortgage rates actually came down a bit, and which was great news. However, because of the way the news cycle and the way the market cycle is going right now, just yesterday, I think all of those gains were basically erased because we were back up. The 10-year Treasury note was back up, which meant mortgage rates were back up again. So, what does this mean? There's going to be a lot of volatility, a lot of up and down when it comes to the news cycle and the rates and everything from the economy point of view. The thing is to pay close attention, stay dialed in. If it's particularly if you're looking to either lock in an interest rate if you're a buyer, or if you're looking to refinance if you're a homeowner who has 8+% mortgage rate or even in the sevens. Because right now I think we got toward the little bit lower than 6.5 or right around there in the past week, but then again they bounced up again. So if you don't have a great mortgage lender to talk to keep you locked in, to know when is a good opportunity to do that, reach out to us. We can connect you with some folks. Now, with that said, let's just jump into some of the numbers here. So I'm looking at March of last year compared to March of this year. Just for Henderson County, this data is sourced from our multiple listing service information for Henderson County. And basically what we're seeing is a trend of extended days on market. So the average days on market was 13 last March. We're at 24, almost double that amount of time. Now, these numbers, they vary if you look at the data from a zip code level, if you look at it at a county level and so on. I've seen numbers, median days on market as high as 60 in surrounding areas. So it's definitely taking a little bit longer to find the buyers because, frankly, there's less of a buyer pool because of the rates, the volatility, the uncertainty, that sort of thing. That also means that the total amount of supply of homes on the market has ticked up. So we were at 2.5 months supply. That's the total amount of homes that would take if we listed everything. Everything that was listed today sold through. It would take 2.5 months, give or take. This March, we're at 3.5 months, so we extended a full month. And to give you an idea why, it's the inventory. The inventory has gone up. So we had 308 homes active for sale last March. We're now at 433. That has an upside if you're a buyer because there's just more selection, more to choose from. Pricing, if you're a seller and or from the buyer perspective too, pricing is stayed really stable the March year over year. So we were at a median sales price. I like to use median because average takes into everything, and you might have some low outliers and some high outliers. Like if you have a few multi-million dollar homes sell in a month, that's going to skew your average up. Whereas median takes the halfway point between everything that's sold. So median price point last March was 459,000, where this March we're at 459,950. So pretty flat year over year, give or take, especially considering the gains that we've seen over recent years. And that was really the surprising takeaway that I was going to mention too, is that the pricing is relatively stable year over year from March to March, and the list to sell price. In other words, if you're a seller and you list your home, uh, you're getting about 98% of that list to sell price from a March year ago. And we're at 98.2 today. So they're holding in price wise. So it's a good thing. We like stable markets. It's getting, I would say the trend line is going toward a more balanced market. For the last several years, we have been highly in a seller's market because inventory has been so low. We're seeing inventory increase, which means now we're getting into more, not super favorable for either seller or buyer, which is a normal market, which is exactly a good place to be. But keep an eye on things. Things are going to change as we go week to week, day to day. And if you have any questions, just reach out to us.